The Bank of Japan's September meeting reveals a tug-of-war over the yen's future, yet the currency barely budges. The latest summary of opinions from the Bank of Japan's BoJ September policy meeting offers a fascinating glimpse into the diverse perspectives among policymakers. But here's where it gets controversial. Despite these varied views, the yen remains largely unchanged, leaving many wondering what's really driving the market. Here's a breakdown of the key insights from the meeting, which reflect a mix of caution, optimism, and strategic patience among BoJ members. One member advocated for continuing to raise interest rates if economic growth and inflation align with forecasts, signaling readiness to tighten policy gradually. Another emphasized that Japan's economy is expected to slow temporarily due to the impact of U.S. tariffs, a reminder of how global trade tensions ripple through domestic markets. Conversely, a different voice stressed the importance of maintaining low interest rates to support the economy for now, highlighting the delicate balance between growth and inflation control. Some members suggested it might be time to consider resuming rate hikes, noting that over 6 months have passed since the last adjustment, which could imply a need to recalibrate policy. However, caution was also voiced. One member warned against surprising the markets with sudden rate increases, underscoring the risks of volatility. Another member recommended waiting for more concrete data before moving forward with policy normalization, advocating for a data-driven approach. The importance of evaluating the effects of trade policies on the global economy, U.S. monetary policy, foreign exchange rates, and domestic prices and wages was highlighted by one member, reflecting the complex interplay of factors influencing BoJ decisions. While some see value in waiting for clearer signals on the U.S. economic outlook, there's concern that delaying action could allow inflationary pressures to build, as noted by another member. A member pointed out that since the economy and prices are tracking forecasts, policy rates should be adjusted steadily unless significant deviations occur. Looking ahead, one member mentioned that a wealth of new data is imminent, including the effects of U.S. tariffs, corporate earnings from the first half of the year, and the Tankan survey, which will provide deeper insights into business sentiment. But there's more beneath the surface. Some members believe conditions are aligning to resume rate hikes and adjust Japan's still low real interest rates, especially as external economic headwinds begin to ease. Others argue for pushing rates closer to neutral levels due to upside risks to inflation, suggesting a more proactive stance. Positive signs were noted, such as Japan's economy standing on firm ground with consumption finally gaining momentum. The gradual and prolonged impact of U.S. tariffs on both the global and U.S. economies was acknowledged, with warnings that if tariff-driven inflation severely damages the U.S. economy, Japan won't be immune. Monitoring corporate surveys like the Tankan was emphasized to ensure companies maintain a proactive business approach. Inflation is seen as gradually accelerating toward the BoJ's 2% target, though it hasn't fully reached it yet. Concerns were raised about sustained food price increases potentially pushing underlying inflation higher, but also dampening consumer spending. Some members believe Japan has roughly met the BoJ's price target already, cautioning about upside risks due to the economy's vulnerability to second-round inflation effects. Fiscal policy was flagged as a significant factor that could drive inflation higher, adding another layer of complexity to the BoJ's policy decisions. For those tracking political developments, keep an eye on Saturday's pivotal moment. Koizumi's potential win as prime minister could strengthen the yen, adding another twist to the currency's story. See https investinglive.com/central bank. Saturday is the timeline in the sand for the yen Koizumi PM win could lift JPY 22050929. To dive deeper, the full summary of opinions from the September 18th to 19th, 2025 meeting is available here. https://boj.or.jp/npm schedule map/opinion 2025/OPI 2519. What exactly is the summary of opinions? After each monetary policy meeting, the BoJ publishes this document to capture the diverse views of its policy board members on economic and financial conditions. It covers assessments of domestic and global economic growth, inflation trends, and employment, evaluations of current monetary policy tools like interest rates, asset purchases, and yield curve control, including their pros and cons, perspectives on future policy directions and timing, considering external risks such as global economic shifts. Any dissenting opinions, where members express views differing from the majority. In a few weeks, the BoJ will release the minutes of this meeting, which provide a more detailed and technical account of discussions, including nuanced debates and alternative viewpoints that might not appear in the summary. While the summary of opinions is designed to be accessible and timely, the minutes offer a deeper dive for those seeking a comprehensive understanding. So here's the big question. With such a range of opinions and cautious optimism, why is the yen barely moving? Is the market signaling confidence in the BoJ's steady approach? Or is it waiting for clearer signals before reacting? And how might upcoming political shifts and global economic developments tip the scales? We'd love to hear your thoughts. Do you agree with the BoJ members who favor patience? Or do you think Japan should act more decisively to adjust rates? Could the yen's current stability be masking underlying tensions? Share your views and join the conversation below.